Good morning, I'm Kevin Cross, owner of Cross & Associates and president of the Anchorage Board of Realtors, and today I wanted to give you guys a little market update on what's taking place regarding the $25 billion settlement that the United States Department of Justice and 5 major lenders have come into agreement on. United States Department of Justice recently settled with 5 major lenders, and those lenders were Bank of America, Wells Fargo, JP Morgan Chase, Ally Financial, which is GMAC, and Citi Mortgage. Now this only affects those 5 major lenders. There's another settlement that's currently in the works over the next 9 major competitors, but I wanted to put this into perspective what this means to you. There's 7 points that are very important on what this means to the real estate industry in general. Number 1, robo-signing is now completely forbidden. What is robo-signing? Robo-signing was rooms full of individuals whose jobs were just to sign. It wasn't a robot sign, it just meant these people were signing like robots, just any document that was put in front of them. I think the minimum requirement that they saw that came out in the investigation was around 300 pages an hour that they were required to sign. So to put things in perspective, they would generalize the names like a Linda Green or a John Thomas, or they tried to keep it simple, short, as fast as they could sign it to get through these documents. What they came out of this is that they said although the mortgages are valid, and that's what the Supreme Court has dictated, that the mortgages are valid, the process had errors. So understand that this will still allow them to proceed with foreclosures. However, there's going to be some changes. Part of the settlement requires that there's more human contact and more human oversight. Also, another thing that is that dual track foreclosures are now strictly prohibited. This is the process with your 5 majors that typically when an individual is requesting a loan modification, that they also are proceeding with a foreclosure at the same time. This is now strictly forbidden. If they're in the process of applying for a modification, they cannot be foreclosing on the property as well. This may draw out the time frames for modifications, but actually part of this legislation is going to offset that. So what we anticipate is that, again, modifications and foreclosures cannot run parallel. It's one or the other. So let's see what else we have here. This legislation will not change the systems overnight. Listen, I know a lot of people that are in default, they have a modification and a foreclosure going. They're like, hey, listen, they have to stop now. Understand that although legislation happens overnight, the process is going to take a while. We anticipate it's going to take anywhere from 90 days to 6 months for these changes to go into effect. Another thing is that all on short sales, loan modifications, they will be required to have a single point of contact. Okay, they cannot jump departments and push you all over. Understand that people get sick, people resign, but no bulk moves. So anybody's worked with a short sale or they've been thrown from one negotiator to the next and back and forth and it's crazy, this is meant to minimize that. No more can they do it. Single point of contact, management oversight. So where is this money going? Understand that $5 billion of this settlement is going to $2,000 payments to individuals whose houses were foreclosed on between January 1st of 2007 and December 31st of 2011. Okay, so if you were involved in a foreclosure in these banks, you may be eligible for a $2,000 reimbursement. There are some things over the next 90 days. They're going to be reallocating who's eligible, but for the most part, that's going to be a large majority of individuals that have been financed by these banks. Understand that $25 billion is less than 5% of the actual impact, negative impact that these banks and these mortgages had on the financial industry regarding mortgages. But they're trying to. It's actually not so much to be a punitive, although some might say it is, as much as it is to try to rectify the current situation that we have. Additionally, $10 billion is going to cure current delinquencies, and that means if you're in a modification, they've got $10 billion to work towards getting you modified, doing price reductions, basically principal reductions, and to push short sales. It's important to know that in this settlement, they're allowing the banks to write off more money on taxes with short sales. If it basically right now a loss on a first mortgage, they're only getting 50 cents on the dollar, and the loss on a second mortgage, they're only getting 10 cents on the dollar. So it's important to note that how those push towards motivating lenders to work with short sales. However, the REO process, if you're not making your payments, if you're not current, if your client's not making their payments, they're not current, this will also expedite that, so that those process that typically takes 270 days to REO and to auction a property is going to shorten dramatically, because this is going to improve the systems on both sides. So again, it's more important that your homeowner, your property owner, reacts faster when they're getting into hardship. There's more funds, there's more access available for them to rectify the situation earlier, but if they wait to respond, it's going to be faster for them to foreclose on the house. So understand that when it regards these losses, I think it's interesting because Bank of America hasn't paid corporate income tax in over 2 years because they've had so many losses. But I think they had record profits last year, but offset with their losses, they didn't have to pay taxes. $3 billion is going into refinancing current homeowners and reducing payments, reducing principal. So if you're current on your mortgage and having problems, you can apply. There's going to be $3 billion allocated to assist in that process. So that's good news. $7 billion is for assistance in forbearance and relocation assistance. Now get this. They've discovered that the average loss on a short sale is 15%. The average loss on a foreclosure is anywhere from 50 to 85%. So what they've decided is in this foreclosure, the 5 banks have set aside $7 billion to give incentives to homeowners to leave the property either through a deed in lieu or short sale, and actually give them cash expenses to move. That way they're left with a property in good condition that they can resell or get top dollar for. So that's very interesting. They're actually, I mean, before at a short sale, you might expect paying some back dues or something like this. Listen, $7 billion for these 5 banks going towards giving incentives for the homeowner to leave the property in good condition in Amesbury. Timelines, the next 30 to 60 days is going to be an administrative period. And then 6 to 9 months is where we're going to have the attorney generals from each state will be meeting with the administrators from the United States Department of Justice and talking about what this means locally in that market, and who will be eligible for these funds and what, and how this is going to break down. Finally, what does this happen? What does this mean? What is this whole settlement? Remember, it's a settlement. It means they both came to the table. Okay. Ultimately, this provides incentives and options for foreclosures, so that there's better systems up front to prevent this from happening. It also streamlines the foreclosure process, which means provided that they've provided these services to individuals, they can foreclose on your house rather rapidly, 120 days. So understand that. So, and the big thing to take into this is the only resistance that's been from the 5 major banks is understanding that for loan modifications, 35 to 50% of all loan modifications end up in default or foreclosure inevitably. So if 10 loan modifications go out, 5 of those are still going to end up in foreclosure. It means people don't make their payments, or they, or they fall behind. So in the long run, modifications, restructuring, REOs, what does this mean? This means that banks are going to be pushing for the short sales, okay? Which is a fantastic, because what we know is that on a short sale, it's less damage on the credit. It's also only on the credit for about 2 years. It also falls off after 2 years. So 2 to 3 years, correction. It falls off your credit, whereas a bankruptcy or a foreclosure are there indefinitely. Okay, foreclosures are recorded, right, through the courthouse. Even though we're non-judicial foreclosure, it's still recorded as a foreclosure, and it never goes away. Short sales fall off after 3 years. Nobody will be the wiser. So those are important things to notice. That's basically what this means. If you have any more questions, call me, Kevin Cross, Cross & Associates, 865-6529. Be more than happy to discuss this. Again, Cross & Associates appreciates your business, appreciates the opportunity to work and serve the community. And as president of the Anchorage Board of Realtors, this is why it's so important that you're working with a real estate professional. The individuals that are out there, particularly certified distressed property experts like myself, there's several others out there in the community. Make sure you've got somebody that's up to snuff on what's taking place in the mortgage industry and how we can protect you. And if you ever, not only providing great real estate for our clients, but making sure they've got an exit strategy. And if they ever need to get rid of the house and they find themselves in hardship, that we're there to assist you. Again, appreciate it. You guys have a great day. Thank you.